Hi to IPO subscribers. Welcome to eaglelive.a. Today, let us review the IPO from Technocraft Ventures. Here we go on IPO review. Investors, you want your investment to be safe. The financial status of the company is very important. That too, invest in a healthy company and simplify it. That will take care of your investments. Try to follow the fundamental analysis and safeguard your heart and mind. Now let us start. See, this is the Technocraft Ventures financial analysis report generated by AI-powered software. Based on the metrics given to the AI-powered software, this company has been categorized as a healthy company. Very good. So let us see what are the financial strengths that made the company a healthy company. In financial analysis, first let us see health analysis. In health analysis, solvency ensures the sustainability of the company. Here you see all the metrics are positive. All the metrics are positive. What more you want? Coming to liquidity. Liquidity ensures the survival of the company. Here see, both the current ratio and quick ratio are positive. Very good. Only negative aspect point here is operational efficiency. That gross margin ratio, of course, that varies from company to company. Benchmark we have taken 50%. Here it is 32.5%. Okay. Receivable turnover it should be more than 7.8. It is 3.92. And trade payable ratio also it should be more than 8. It is 6.7. It is not an issue because this will be changing from time to. What you will have to ensure that whether the company's management is a good corporate management or not. Healthy companies means you can take it for granted the corporate management is very good corporate management. That is more than sufficient. Coming to financial irregularities, there are no financial irregularities. Good. Coming to profitability, so EBITDA is 72.18, EBIT is 20.17, PBT is 58.67, PAT is 43.39 crores, cash profit 45.4, EPS is 14.39, very good. So EBITDA margin is 20.79, very good, more than 20%. Net profit margin is 13%, very good. ROC is 28%, ROE is 27%, very good. Book value per share is 54.27. Oh, good value. Coming to cash flows, all are positive except investing activity and financing activity are negative. Net cash flow is positive, that is 12.59 crores. So coming to market values, market price 212 is the cap price of the IPO. And based on that, price earning ratio is 14.73 is very good. And coming to price to book value, it is 3.9. So it should be less than 3. 3.9 is okay. Let us see the projected price to book value, then we can have a decision on the investment. Coming to growth indicators, all are positive. Not even one metric is negative. A good financial status of the company. That's what an investor should look for. So here now we go on IPO review. Here is IPO review of Technocraft Ventures Limited. Today we are analyzing the IPO's Technocraft Ventures Limited. We will review the company's business model, financial health, valuation, risks, and conclude whether this IPO is worth considering for investment. First, business overview. Technocraft Ventures Limited is a multidisciplinary engineering, procurement, and construction EPC company specializing in turnkey public infrastructure projects. One. Key business segments: water supply scheme projects, sewerage treatment plants, wastewater treatment plants, water transmission pipelines and reservoirs, trenchless and micro tunneling projects, roads and highways construction, electrical transmission infrastructure, urban infrastructure and residential development, operation and maintenance of public utilities. Oh, so much. So many. Well, we think that the scope of business is very good. So, business highlights. Diversified EPC infrastructure portfolio executes large government infrastructure contracts, provide end-to-end turnkey projects execution. The presence across multiple infrastructure vertical reduces business concentration risk. Good. Position to benefit from India's infrastructure expansion. Very good. Coming to market opportunity, industry growth drivers. Massive government infrastructure spending under the National Infrastructure Pipeline, increasing investment in water supply and sanitation projects, expansion of renewable energy and power transmission infrastructure, rising urbanization driving demand for roads, housing, and civic infrastructure, growing preference for turnkey EPC contracts. This is the industry growth drivers. Good. Overall, industry outlook positive. Coming to IPO details, IPO highlights total issue 251.82 crores, fresh issue 201.5 crores, offer for sale 50.57 crores, price band is 200 to 212 rupees per share. Utilization of IPO proceeds 150 crores for working capital requirement, remaining amount for general corporate purpose. And financial health and valuation. So financial metrics, EPS is 14.39, PE ratio is 14.73, PB ratio is 3.9. So growth-based valuation, projected PE is 9.76, projected PB is 2.96, very good. Valuation, current valuation appears reasonable. Strong earnings growth improves forward valuation, slightly premium on book value, but justified by growth prospects. Very good. Promoters and governance. Promoter holding before IPO 97.38%, after IPO 68.01%. Strength. Experienced management team, strong promoter ownership after listing, long operating experience in infrastructure projects. Governance concerns. Related party business operating similar sectors. Related party transactions require continuous monitoring. It's common in all the cases. Coming to risks, the major risks are pending legal proceedings involving the company and promoters, dependence on government infrastructure projects, competitive EPC industry with pressure on margins, contingent liabilities, pending CSR compliance for previous years, around 1/3 of IPO proceeds allocated toward general corporate purpose. This is at the highest side. Working capital fund diversion risk under Section 186 of the Companies Act. What is this? See, as per 186 of the Companies Act, a company can invest up to 60% of net worth in any other company. The fund raised through IPO, that's a working capital fund raised through IPO, becomes part of net worth. How? The face value will be credited to the paid-up capital and the premium will be credited to the security premium. Both together, that becomes net worth. That means, suppose let's take case of 150 crores. Now there is a 150 crores amount. 60% of that 150 crores, that is 90 crores, the company can divert and invest another company. This is enabling section for investment, but this has become a facilitating section for diversion of funds. It is not that the company is going to divert the funds. The only thing is be careful about it. Because there is a possibility. What you can do is next year when you analyze the financial statement, see if there is any investment in subsidiary companies. If it is the case, better you take a right decision. Coming to market sentiment, institutional allocation, qualified institutional buyers, up to 50%, NIA up to 15%, retail investors up to 35%. Market sentiment analysis. The IPO follows the standard main board allocation structure, allowing a healthy participation from institutional and retail investors. Infrastructure and EPC companies continue to attract investor interest due to sustained government capital expenditure. Institutional participation will be an important indicator of market confidence, while strong subscription levels could support listing performance. However, listing gains may remain sensitive to overall market conditions and prevailing investor sentiment during the IPO period. Market sentiment positive to neutral. Positives. Investment positive. Financially healthy company. Good. Strong government infrastructure and tailwinds. Good. Diversified EPC business. Reasonable IP valuation. Healthy earnings growth. Working capital infusion supports future project execution. Very good. Experienced promoters and management. Valuation of opinion. At the upper price band of 212, the IPO is available at a PE ratio of 14.73, which is reasonable for an EPC company with a strong earnings growth. Although the current PB of 3.9 is slightly elevated, projected growth significantly improves future valuation metrics. Good. Overall, the IPO appears fairly valid. Good. Final conclusion. Technocraft Ventures Limited operates in a sector expected to witness long-term growth due to continued government investment in infrastructure. The company has diversified operations, healthy financials, and reasonable valuation, making it a fundamentally strong business. However, investors should consider governance-related concerns, legal proceedings, and dependence on government projects. So, Eagle Eye View verdict: financial health healthy, valuation reasonably valued, overall rating moderate, may subscribe. This IPO may be suitable for long-term investors seeking exposure to India's infrastructure growth story, while short-term listing gains will largely depend on market sentiment and subscription demand. As always, investment decisions should be based on your own financial goals and risk tolerance. Closing. If you found this analysis helpful, like the video, share it with the fellow investors, and subscribe to Eagle Eye View for independent IPO review, financial health analysis, and investment insights powered by eagleye.aa. Thank you for watching. Thank you very much.